from the White House, US President Donald Trump has officially signed tariffs on imports from America's key trading partners, Canada, Mexico, and China. Under the new policy, a 25% tariff is imposed on Canadian goods, along with a 10% levy on Canadian oil exports. Mexico faces a similar 25% tariff, while all Chinese goods entering the United States will now be taxed at 10%. The White House justifies these tariffs as a measure to hold China, Mexico, and Canada accountable for the influx of undocumented immigrants and fentanyl into the US. The new tariffs are set to take effect on Tuesday. In response, Canadian officials strongly criticised the move. Ontario's Premier Doug Ford stated that the tariffs would harm the American economy, declaring that Canada has no choice but to retaliate. Meanwhile, China's Ministry of Commerce reiterated that there would be no winners in a trade war. The Mexican president, Claudia Sheinbaum, has yet to issue an updated statement, but previously emphasized that she would handle the situation calmly and strategically. Former Mexican ambassador to the US, Arturo Sarucán, weighed in on the impact of the tariffs, warning that they could disrupt the deeply integrated supply chains between the three nations, driving up inflation and increasing costs for American households. Estimates suggest that if these tariffs remain in place for over a month, US households could face an additional $830 in expenses. Experts speculate that Trump's move might be a strategic push for an early renegotiation of the USMCA trade agreement, set for review in 2026. Diplomatic tensions continue to rise, with Canada and Mexico likely to impose counter-tariffs in response. However, experts warn that escalating trade restrictions could harm all three nations, making diplomacy the only viable path forward. As negotiations unfold, the global markets and political leaders closely watch the next steps in this unfolding economic standoff.